So we recently saw Tesla stock bounce up after the earnings of Ford, where Ford basically announced that they're doing terribly bad in the EV space, and this is coming after Tesla stock was selling off for a couple of trading sessions. However, one of the things I often say on this channel is that you want to have a holistic approach and look at a multitude of several different data points, with one of the data points being alternative data. And one of the alternative data points I want to share with you guys is the fact that we're seeing a bunch of members in Congress in the last couple of weeks offload shares in Tesla. Now, one of the reasons why I pay attention to what Congress does is because if you add up all the trades from these politicians, you'll see that they've made a return of 26% in the last year. And in comparison to the S&P 500, the performance has been around 10% in the last year. And so the trades from Congress members are almost 3 times the return of the average for the S&P 500. But of course, it makes sense that Congress members are some of the best traders, especially when you take a look at their salaries of $200,000 plus for the year paid by the government. Yet, people like Nancy Pelosi are worth hundreds of millions of dollars by her financial interests. And by financial interests, it's really because, of course, if you're involved in a policy making or deciding which companies are going to get federal grants and what's going to be the outcome for businesses based on a law, and you're also able to trade those businesses, well, of course, you're going to have great insight when it comes to trading. But another alternative data point that I want to share with you guys is Jim Cramer recently calling out on CNBC that he's bullish for Tesla stock on the 27th. Now, I'm not sure if you guys are aware, but Jim Cramer is often wrong a lot of times. In fact, there's actually an inverse Cramer strategy that basically does the opposite of what Jim Cramer does, and it rebalances on a weekly basis. And if you just simply follow the opposite of what Jim Cramer does, you'd be up a lot of money. Now, I must admit that is just a funny little alternative data point. I don't hold too much significance to it, but I do want to point out that if we look at things from a technical perspective, we see that the overall NASDAQ has rallied tremendously, and it would make sense for a little bit of a correction to occur. But with that said, I want to go ahead and hop into my laptop, as I often do for my videos, and cover Tesla a little bit more deeper from the perspective of someone who's investing in Tesla in the long term, but also from the perspective of someone who trades Tesla in a separate trading account in the short term. All right, so we are officially in my laptop and we're taking a look at Tesla stock. But before I go ahead and parse a little bit more deeper into the price action, I want to highlight something that I believe has some significance to it. For example, if you go to x.com, formerly known as Twitter, we see this tweet by Elon Musk saying X monthly users reached new high in 2023, kind of just showing us this graph that, x.com, formerly known as Twitter, again, is actually having a growth in users. Now, why is this even related to Tesla, right? Well, the main concern is, even though X is a private company, if we see weakening signs that it's actually doing worse than expected, the main concern is that Elon Musk, is going to have to further sell some more shares of Tesla just to go ahead and fund a project for X.com. I mean, we saw back in 2022 when there was a lot of selling pressure for Tesla, it was exacerbated with Elon Musk selling even a tremendous amount of Tesla just to fund the acquisition of Twitter. So obviously, we want to see that X is having healthy signs, which is, again, just some alternative data just showing us that, hey, it's good that X is doing good, because of course that means it's less likely for Elon to sell his shares of Tesla, right? But with that said, I want to kind of zoom in a little bit over here and break down some things that we want to pay attention to as far as price action. So as I noted in the beginning of this video, we've seen Tesla stock fall down, and this started off with the earnings, right? Obviously, they beat earnings, but there's always more to earnings with its forward guidance, and the forward guidance wasn't that great. We saw a little bit of a bounce over here. Then, of course, we saw another bounce once we saw the forward guidance, or heard the forward guidance from Ford saying that it's kind of seeing a little bit of trouble in paradise with its EV vehicles, by actually showing that there's even more money being lost in its EV business than expected. And on top of that, they're kind of pushing out their projections for production numbers on their EV vehicles to a later date than what they had said previously. So obviously Tesla, Tesla's doing good because Ford is kind of looking bad over here, right? But one of the things I've highlighted to the Push and Profit private group oftentimes, and also to the, publicly on YouTube, is that we want to pay attention to the, volume profile over here, and pay attention to volume relative to price, which is different from your traditional volume relative to time. And one of the things we're seeing here is that there's a lot of volume around this area relative to price, and the concern is, well, if Tesla breaks below this shelf of volume relative to price, well, then we enter in this area where there's little volume by price, and we don't really see it kind of, seeing that example of more volume relative to price until we go to this early $200 level. Now I'm going to go ahead and cover that a little bit, but I kind of want to pan over to, the QQQ, which is a NASDAQ index ETF. And as I said in the beginning of this video, we're seeing, it's kind of cooling off if you kind of zoom into a smaller time frame, and it would make sense to see a little bit of a healthy pullback for the NASDAQ, especially after it's rallied so hard. I mean, right now we're still in the middle of earnings season, right? We already had Tesla announce its earnings, but there's still a tremendous amount of other companies that have yet to announce their earnings. And the issue is, when you have a lot of these tech stocks run up, it makes it harder for earnings, right? And the reason is because it makes it harder for these companies to really prove their valuation after it's been running a tremendous amount. Because as I often say with this hypothetical situation, let's say you have a stock that ran up and went over to $500 per share, and then you have earnings. Well, you need those earnings to justify that high price of $500 per share, because why do investors put money into a company? Well, they want to see a return on their capital, right? And so if something's trading at $500 per share, but the earnings suggest that, hey, we're doing good, but it really should be trading at $480 per share. Well, guess what? Obviously, you're going to have to readjust, because now you're paying a little bit more of a premium for something that's really only worth $480. And so that's a big issue, that the NASDAQ has rallied up a tremendous amount, and we're going to have to see what ends up happening with these earnings. Now, kind of going back into Tesla, one of the things I've said is that, we want to pay attention, obviously, to all the different data points. I talk about alternative data. I talk about looking into the fundamentals. We talk about the technicals, monetary policy. I covered that just earlier this week, where we had, the Federal Reserve hike an additional 25 basis points. Of course, you want to pay attention to fiscal policy. I mean, there's so many different data points that you want to pay attention to, and that's why I look at all of them in regards to Tesla. And so the main concern is, we may see Tesla fall below this area and kind of capitulate down to this like low $200 area. And of course, that would be bad if you're someone who's trading Tesla in the short term and you're trying to go long, because guess what? That means Tesla would fall down. But if you're someone who's investing in Tesla in the long term, then Tesla cooling off isn't too much of an issue, especially being that, year to date, Tesla's up a tremendous amount. I mean, if we kind of just map it out just a bit and kind of go from the beginning of this year, which is somewhere around here, we're kind of just estimating, we're still up around almost 100%. Which is great. I mean, it wouldn't be terrible for Tesla to kind of cool off, because that gives us an opportunity to kind of dollar cost average and buy more shares. Now, something else I've highlighted from a technical perspective is that we've seen Tesla kind of, really cool off every time we hit this descending trend line. We see it a multitude of different times. 1, 2 around over here, 3, 4, and then again rejected around this area. Now, of course, things can change, and stocks aren't adherent to just the squiggly lines that you draw on the chart, which is why I don't put too much weight on technical analysis, because at any day we could have really good news, whether fundamentally or just from any other source of data, that pushes Tesla stock upwards. Well, that would be good, because if we break this trend line, that would be extremely bullish, as it's been a long descending trend line. And of course, there's little volume by price, where if there's a lot of buying pressure, it would push Tesla stock even further and get us back to, that $400 level, which is excellent, but we have to wait and see. And so right now, this is a pivotal moment. And as an investor, long term for my portfolio, I'm not just yet adding into Tesla, even though we sold off quite a bit, because I really want to monitor the situation and see, hey, is Tesla going to fall down? And if it does fall down, to that early $200 level right around here, I want to see, well, once it reaches this area, is it going to bounce up and show confirmation that it's back in an uptrend? And that's when I'm going to go ahead and want to deploy more capital. Now, there's people that debate whether you should dollar cost average equally every month or do a lump sum. I mean, you could read online online, there's research papers that suggest, one way is better than the other. At the end of the day, you're entitled to however you feel is the personal best situation for you when it comes to investing. I don't like to do equal amounts all the time. I do so, for index funds, but for a lot of these individual stocks like Tesla in my long-term portfolio, I don't invest equally every month. That's just my personal preference, and I like to wait for those areas of opportunity where we see selling pressure, right? I often quote Warren Buffett a lot of times on this channel, where when it comes to, a discount on groceries, everyone's excited to buy more carrots, but when it comes to, a stock, once it sells off, people don't see it as a discount, right? And I'm just waiting for that discounted offer for me to buy more shares of Tesla in my long-term portfolio. But that's just from a long-term perspective. Now, why am I bullish on Tesla in the long term, although I believe that we're going to see some issues coming in the near future? How can that be possible? Well, again, if we just look at the fundamentals in comparison to a lot of these legacy automakers, it's very clear that Tesla is just in the lead. I mean, we've heard Ford in the past say that they don't look to be profitable in the EV sector till 2025, while Tesla's already profitable, right? But I bet you, right, that we're probably not going to even see Ford profitable in 2025 in the EV section, and probably is going to have to be delayed even further, because again, they were just, saying that they would be able to scale up to 260,000 vehicles per year by the end of 2023, and now they're coming out with their projections saying, oh wait, actually 2023 may not happen. 2024 is when that's going to happen for sure, right? And so we're seeing like this pushback and delay on their projections, and so that just lets me know that Tesla is still in the lead, right? And so that's why we saw this optimism in Tesla, and that's why I continue to be optimistic in Tesla, because Tesla has the lead in the EV market, and they control a majority of the market share. I know a lot of people kind of point out, especially bears, they kind of point out to the fact that, hey, what is Tesla going to do when a lot of these legacy automakers enter in and they kind of take away from Tesla's market share? Well, we also have Wright's law, right, where we see that the more you are in, producing something, the more efficient you become with actually, producing that product. And I gave an example in a previous video and kind of compared it to Tesla, where because Tesla's scaling up and producing so many vehicles, they're going to find ways to optimize and make it much less costly, right, to produce those vehicles. And so the example I said is if you were buying a chair from IKEA, right, maybe you have in the past, maybe you haven't. I bought, some furniture from IKEA, although I do find their furniture kind of cheap sometimes, but that's, I'm going in a separate tangent, but kind of sticking to the scenario over here. If you buy a wooden chair from IKEA and you build it, that first chair may take you an hour to build, right? Because you're new to the instructions, etc. But now the second chair, it may take you half the time to build because you already know what you have to do. You build a third chair, it may be even faster, and then eventually you start scaling up where you're hiring people to build certain sections, and you make it even faster, and of course you're saving time, and saving time is saving money. And so that example is kind of what I kind of used to bleed into Tesla, with the fact that although we may have a lot of legacy automakers enter into the space, Tesla is going to benefit from Wright's law of being able to produce more vehicles at a bigger scale and figure out how to become more efficient. And then, of course, the main bullish case for Tesla is full self-driving, which is just another story about boosting its profit margins. So a lot of reasons why I'm bullish on Tesla in the long term. But when it comes to the short term, we're kind of just looking at what's going on over here, and it may be an opportunity to short, especially if we see Tesla kind of break below the shelf right over here and start falling down. Why? Again, very little volume by price. When we saw, in this area where there's very little volume by price and there was buying pressure, well, that's where we see, big candlesticks like this and gaps moving upwards, right? Because there's people buying up the order books, and of course that's going to push price upwards. But if the inverse were to happen, where we come down, little volume by price again, and there's selling pressure, well, things could fall quickly to that, low $200 area. And so, we may find opportunities to short. Again, we have to be patient. One of the things I often say to the Push and Profit private group is that you don't have to trade every single day, right? It's really about finding opportunities to exploit. And I know that may sound harsh, using the term exploit, but that's pretty much what it is when it comes to trading or investing. You're exploiting opportunities, right? Even if you're an investor, if you're trying to buy something, you're trying to find a discrepancy between price and value, and deploying capital into that, and that's exploiting a situation. If Tesla's falling down, but you see that Tesla has more value in the long term, that's exploiting a situation. And I know exploiting has a negative connotation, but at the end of the day, that's what we're doing, regardless if we're trading and or investing. And so one of the things I'm kind of doing right now is being patient and monitoring several different data points. And one of the things that caught my eye was what I mentioned today earlier in the video with, Congress, selling Tesla. But of course, we're gonna have to, stay focused and kind of follow up. Again, one of the things I often say in these videos is that you want to make sure you do your due diligence and not just copy based on what anyone else says. Just because, Kathy Woods or Jim Cramer or even myself say something about Tesla, you shouldn't blindly copy. You should always only trade or invest in whatever you see value in. And so hopefully, with that said, this video provided some utility. Hopefully there was something that you learned that was new. And with that said, guys, I hope you guys enjoyed this video, and I'll see you guys on this next video right over here. Take care, guys.